Hey, what's going on, y'all? Hope everyone's having a fabulous day. If you haven't gotten a chance to subscribe to this channel, please do so. I want you to ring the notification bell. That way, when I drop a video, you'll be notified. In 2017, I started making videos. I was coming off of a bankruptcy. I knew this was the perfect opportunity for me to show people with bad or poor credit how to build credit. When I was getting started with credit, I would hear a lot of people talk about they have bad credit or poor credit. And when I would look at their credit reports, they would have very low credit scores with collections, bankruptcies, charge-offs, you name it. I've seen a lot of different things on credit reports, and this is when I was just getting started with credit. I was so frustrated with some of the information that I was seeing on YouTube and reading. People were, I don't know if they still blog nowadays, but I would see these things and I would get frustrated. I would see things like you need to be under 30% utilization, you want to go through credit repair, and it was frustrating. I even joined a few credit repair companies just to see their program, just to see what they were doing with disputing items on credit reports, the information that was given. I wasn't satisfied. I was quite frustrated that this is the industry that is supposed to be here to help people with bad credit. It was more of a situation where they were preying upon people with bad credit. And so I started making YouTube videos showing people how to build credit, what steps to take when building your credit. I started teaching people about installment loans and revolving lines of credit, like the differences between the two. I did this in hopes that I can get as many people to understand how to go about building their credit the right way. Before you give anybody else money for deleting items off your credit report, are you investing in yourself, getting your credit in a position to where you are going to be able to move forward with your credit report? A lot of times when you're dealing with a credit repair specialist, what they're doing is they're trying to feed their families, which is understandable. But if you're trying to have the most impact on your credit reports, the things that are going to have the most impact on your credit reports is revolving lines of credit. When you're in a position and you have bad credit, it's really hard to get a financial institution to extend you a line of credit when you have bad credit. So what you want to do, you want to find reputable companies that you're going to want to do business with going forward. These financial institutions that I'm going to show you, Discover, Capital One, US Bank, Bank of America, these financial institutions, it may be challenging trying to get into their financial institution, but I'm going to provide links so that you're not wasting inquiries trying to get into these financial institutions and you don't get qualified, but you have a bunch of inquiries on your credit report. So I want you guys to at least consider what I'm saying. If you notice that every other week there's a new product targeting people with poor bad credit, you may have to ask yourself, why are these people doing this? Why are they establishing products? Is it a money grab? So I want you guys to at least consider what I'm saying. Don't look at what I'm saying as this is the only way for you to get to the 700s. This is not the only way. But if you at least attempt and apply some of the methods that I'm trying to teach you guys as far as building credit, I'm sure at the end of your journey, you're going to say, this was an easier path that anyone else was trying to teach you. Some of the mistakes that I made when I was going through building my credit. One mistake that I made was I applied for some credit cards that I ended up canceling because I didn't want to continue our financial relationship. So when you're applying for credit, even at the very beginning stages, you have to start thinking forward. What financial institutions am I going to want to do business with when my credit score is in the 700s? Am I going to still want to have an open sky when I have a 750 FICO score? That's the questions that we're not asking ourselves when we're first starting. I'm confident. I'm very confident that on this journey, you're going to get to the 700s and you're going to be mid sevens before you know it. So you have to have the mindset that what financial institutions am I going to want to do business with when my credit score is in the 700s? So if you're looking at, I'm just going to call it Open Door. If you're looking at a secure credit card called Open Door, when you're looking through it, does this card graduate? There are certain things that you're trying to look for in a secure credit card. Do they have any other products? Meaning, can I get a personal loan through you? Can I get an auto loan, a mortgage? If they're not extending these types of products for you, there's a really good chance you're not going to want to do business with these financial institutions from the get-go. So these are the questions that you have to really ask yourself. And most of the time, what most people do when they're starting out, one of the biggest mistakes that you're going to make when you're first starting out is applying with financial institutions that you're not going to want to stay committed to going forward, like once you get to the 700s. When you are looking at the Discovers, the Capital Ones, the US banks, I don't want you to be intimidated thinking that you're not going to get approved. I was there. I once had bad credit and I didn't feel confident in applying for Discovers and the Capital Ones and the US banks and the Bank of Americas. But if you just apply yourself and just take the time to come up with a strategy and a plan on how to build your credit, I'm positive you will be able to get there. Now, what I want you to do is when you're driving through your city, wherever you live, look around at the financial institutions, mainly the credit unions. The credit unions are financial institutions that are begging for you to do business with them. They absolutely know that there are people in their community that have bad credit that they actually want to do business with. When I started my trucking company, one of the first financial institutions to lend me credit was actually a small local credit union. This credit union was so good to me, they gave me a line of credit. They financed the truck. Once you establish a relationship with a credit union, it's unbelievable the steps that they will go to helping you get yourself in a better position. With the local credit union, they give you auto loans, they give you mortgages, they give you checking accounts. They also give you secure credit cards. So if you're thinking maybe you're not ready for a Discover or Capital One, US Bank, something like that, I'm pretty positive your local credit union, they might have one branch in your city. That financial institution is going to do way more business with you than, let's say, a Chase Bank or Wells Fargo or something like that. So what I want to do is I want to talk to you about this Discover It secure credit card. One of the best secure products out there. When you're looking for a secure credit card, what you want that secure credit card to do is graduate. With Discover It, they wait about 7 months. They watch your habits and they say, okay, do you have the discipline? Are you carrying balance month to month? One thing you don't want to do is carry balances from month to month. When you get a secure credit card, you want to use the secure credit card, but you also want to make sure that you make that payment every month. That's probably one mistake that most people make, and they wonder why their cards are not graduating the way that they're supposed to. With Discover It, what they will do is even after your card graduates, let's say it's month 8, month 9, I think it took me 9 months for my Discover It to graduate. After my Discover It graduated, they kept extending me more and more credit as I went on, as I used it. I would use my credit and then I would pay it off, use the credit, pay it off. That is probably one of the best things with Discover that they do. This secure credit card, there is no annual fee. You don't have to worry about getting one of those secure credit cards where they charge you $95 per year just to be a part of their financial program. Discover It, there's going to be a link in the description. You can apply for this credit card without even incurring an inquiry. That's the great thing about the Discover It, that they have pre-approvals. Now, the other great thing about this secure credit card is that they actually have cash back. Now, you're going to have to put like $200 down, I think is the minimum that you have to put down on this card, but you can earn cash back on this secure credit card. And once, like I said, once it graduates, it becomes unsecured. So now you automatically have a cash back unsecured credit card. This is the credit game. Just because you're starting out at the bottom does not necessarily mean that you're going to stay there. Go in the description, at least apply. You won't get an inquiry or anything like that, but at least you will know if you can get approved or not. Capital One is another great financial institution. This was the second secure credit card that I got. Now, the great thing about the Capital One secure credit card, they actually have two secure credit cards. They have the Platinum secure credit card, and then they have the Quicksilver secure rewards. Most people don't know that Capital One actually has a reward secure credit card. Capital One, it also graduates, and you can still earn points with your secure credit card. So with the Capital One Quicksilver, earn unlimited 1.5% cash back. That's the great thing about the Capital One program. The Capital One and the Discover It, they don't have any limits. Like some cards, what they will do is they will only give you cash back up to $1,000 each quarter. But I just want you guys to understand these two secure credit cards, they're not hard to get. If you're floating somewhere around the 600 range, pretty sure you're going to get approved with these. Whatever you can get, use it and keep building your credit. Just because you may only get approved for the Capital One, but you get declined for the Discover. So then what you want to do is you want to go to your local credit union, get a secure credit card through them. Just because Discover didn't approve you don't mean that this stops. So it just keeps going. And from that point, you want to just keep building. Now you got a Capital One secure credit card, plus you got a credit union secure credit card. You hold that for 6 to 12 months, and then you reapply for the Discover It. If you don't get the Discover It, you may have to go through another credit union to get another credit card. But at the very beginning stages of building your credit, it's going to be a frustrating journey. The US Bank secure credit card, a lot of people don't know that US Bank has a secure credit card. This card actually graduates. Now, this US Bank secure credit card, a lot of people won't tell you this. Hard to graduate this card. Several people that tried to get this card to graduate, some got this card to graduate, but it is hard. So if you decide that you want this card, you're going to have to be really disciplined. With this card, you're going to have to put a little bit more money down. With the Capital One Discover It, you can put down $200. With the US Bank Secure Credit Card, you're going to have to put at least $300 down. The Bank of America Secure Credit Cards. Bank of America has 4 different secure credit cards. Everybody's trying to get in the secure credit game. A lot of financial institutions trying to help people build their credit. The Bank of America secure credit cards, they actually have cash back and reward secure credit cards as well. So if you're looking to get a part of a reward program, Bank of America at least allows you to get into their reward program, and you could start building your credit through Bank of America. This is a great financial institution to be a part of as well. I wanted to make this video because, like I said, there's several different people making videos talking about all the different financial products. You can definitely go that route, but ask yourself the question: when you have a 700, 750 FICO score, are you going to want to continue doing business with that financial institution? And if the answer is no, then don't start applying for all these different types of credit cards. These are the things that I want to instill into you, that you can build your credit, but it's going to take a lot of discipline. It's going to take you actually sitting down, coming up with a plan, and understanding which way do you want to go building your credit. I wanted to go back to the ground roots of talking about how to build credit from the scratch. That's how I started making this channel. I want to start talking to those people. I don't want to forget those that are still struggling trying to get their credit on track. And if you're one of those people, stick with this channel. I'm going to keep talking about credit. I'm going to keep motivating you guys, trying to get you guys in a position to where you guys are walking into financial institutions dictating terms. You don't want to be at the mercy of these financial institutions when they're giving you 29% interest. You guys stay blessed. I hope this video helps. I'll catch you guys on the next one. Talk to you later. Bye bye.